Good morning. Today we discuss something about capital and revenue transactions. Capital and revenue. It is like a thing which is most required in proper accounting recording system. If you understand capital and revenue separately, you can make your accounting error free. So the objective of this particular topic to understand and how you make the transaction in records. So we take some defined word to understand capital and revenue. That is capital expenses, capital income, capital profit, capital loss, and other hands is revenue, income, revenue, expenditure, revenue, profit, and revenue loss. We can replace this revenue word with the operating. So the capital, exactly, capital means the amount. Generally we take the sense of that what amount is introduced by the owners, that is the capital. But here we can have different transaction of capital, that is capital expenses, capital income, capital profit, capital loss. So first we discuss capital expenditure. The capital expenditure basically it is meant for acquiring the assets or enhancing the business efficiency or anything to renovate the business. All the expenditures are covered in the capital expenses. Capital income. Capital income basically the things, say we sell the assets, what income we are getting, that is the capital income. We make some transaction for collecting the capital, say for example premium. What premium we get with the capital, that is also capital income. The capital loss or capital profit. The capital profit is when you are making transaction of assets or anything which is related to transaction of capital assets. So that the value of the capital assets is greater than the capital receipt of that particular transaction. The difference is profit, and when you are giving assets with less value at whatever book is showing, the difference is capital loss. Now we move to the revenue part. So revenue, it is known as operations. The revenue means the transaction related to business operations. The business operation, it is started from, if the manufacturing is business there, then we purchase the raw material, we sell and supply to the customer. Between these all these 2 points, all the activities taken place, and for that whatever you are doing, whatever expenses we are paying, that is capital revenue expenditure, and out of that transaction whatever we are getting, that is revenue income. So the revenue income, it is the business income from the operation of business. Then revenue expenditure, the expenditure done for the business operation, and whatever activities are taken place on the regular basis, and the business for business transactions, what expenditure we are paying, that is the revenue expenditure. Revenue profit, all the aggregate income, revenue income, and all the aggregate revenue expenditure, we compare these two, we get the revenue profit or revenue loss. If the revenue income is greater than the revenue expenditure, it resulted the revenue profit. Revenue loss, whenever you are getting less income as compared to the expenditure, aggregate expenditure, that is revenue loss. Now we move to the transaction. We have a proper accounting system, that is double entry system. If we understand these two things separately, we can give a proper record system, and the transaction is pure and the accounting is error free. Say for example, if you purchase an asset, so normally what we do, we debit the assets, and if we use the purchase word, that is for material, and instead of debiting the assets, we debit the purchase account. So it is error in the accounting records. So whenever you are purchasing assets, you must give debit to the assets with the name. The assets is purchased with the name, with its name. So this is basically the transaction as like assets account debit to, say for example, we are purchasing with cash, so cash. If you are not knowing about the capital and revenue transaction, you may have debit the purchases account debit to cash. So this is the principal error, and your account will also be in with errors. We can have one more example. Purchase of assets and expenses for its installation. So normally we purchase the assets with its name, and say for example we paid wages. Wages is normally an operating expenses, but if we pay the wages for installation, it should be a part of cost of assets. So it should be entered like assets account debit to cash. Instead of wages, we put the name of the assets. This is done for proper record system. Thank you.